Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, May 19th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session had quite a huge sell-off. We had significant outside day. If we drop this down to a one-day ADR reading, you'll see how big that day was in comparison to other days around it. Here's yesterday's sessions range right there, about nearly 200 points in range, and everything else around it over the last 10 days, basically half of that range. But this range also is in line with how big it was when it sold off the day after the FOMC meeting and the rate decision 2 weeks back. A huge range day there, and you can see it marked here. Again, after every major rally or up day, we've seen these huge sell-offs, and again you can see them marked here in terms of the size of the range. Now, one thing you'll also notice is after we get a huge range day like this, or like this, or like that, or like this, you tend to see a smaller range day that follows. After this range day, we saw one of this magnitude, for example. After this range day, we saw something smaller, this one. Over here, any of these days you see something that follows up in a smaller range. So today could be very similar in that we don't see a tremendous amount of range today, but anything can happen given this current market and the volatility we're seeing. At the moment, again, the ability to hold the 3,900 level may give us a little bit of a push back up, but at the same time, we could be more digestive today after yesterday's significant sell-off. Any failure to hold 38.50 or so, 38.65, I mean that starts to really open up some downside here into the next FOMC below 37.75. Half could be that next level, and at the same time we're still working downward toward the previous year's low of 36.52 half. So at the same time we have the downtrend that's still intact. Any bounce or any drop into this zone could still give us a bounce, and it could still drop us into 36.52 half, as that continues to be the major downside target ahead. For today, again, we may see a smaller digestive day in the market here. It is fairly rare lately to see two back-to-back huge range, high range days, although again anything can happen. If we take a look here at the NQ, very similar price action again. If we go back and say, okay, here's yesterday's range right there. We had, for example, this high range day the day after the FOMC level. You had that high range day right there. If you just look at those major days, the days that followed, much smaller in range, and right now, again, still ahead of the RTH open, but a very narrow digestive day. That's this day, that's that day. Again, we could see something that's in line with a smaller range day. Perhaps price can get just above 12,000, but not much more than that. So we could be looking at a digestive day here in the market for the NQ after yesterday's significant selling pressure. But again, this goes to demonstrate the bearish PEMA trigger zone we've been talking about and how it continues to control the market. A major stop run day down yesterday through 2-day lows, basically wiping out all of the gains we saw from last Thursday in one fell swoop. That's pretty significant and continues to show how weak this market is. There's a failure to hold the previous year's low right now, and that could open up a major continuation to the next major target below. The next major target being 11.4. 11.4 is a significant key level, and then you have 11.065. That is the 25% extension of the previous year's range. So we could be still looking at a move down toward 11K up ahead. Alright, let's take a look here at crude oil. This one's down 2.3% here today. We have returned not only back to the 107.85s, as we mentioned could be the case when price started to top out in the 115, 116 zone, and not only did we get the 107.85s, but we are now back into the 104, 105 zone, which was our secondary target as well. Again, this is just trading range action right now. You have this range that's developed. The upper end of the range has been very clear. When it gets up into that 115, 116 zone, we've backed off back toward the 104, 105s. There could be a little choppy chop in here, followed by a continuation down toward the 96s. Overall, we're going to continue to stay in this range, and even if we were to see a decline here, we could be looking at another bounce back up within the range. So right now, at the center of the range, and we could see further continuation to the downside. Again, not the easiest to fade into strength given this market and how strong it is, but once you get to the edge, there could be a fade back to the middle. We're seeing it now. There might be a little bit of a follow through into the lower end of the range, and down here could offer another opportunity for a 10 handle rally. Perhaps even beyond that. 20 handles is the range, 96 to 116, and even a little below that. So again, we could be looking at a bit more weakness here up ahead. If we take a look at Bitcoin, Bitcoin right now showing tremendous compression right now, and this is an energy building phase, and it could be rather scary here if this thing breaks to the downside. We have 1, 2, 3, 4, 5 days here of range, and that's suggesting a 10,000 point move up ahead. So if we were to break 28K to the downside, we could be looking at 18,000 in Bitcoin up ahead if it breaks to the downside. 18,000 puts us all the way back to this level. That's what 10,000 points looks like. So this range right here, significantly compressed. And once we do see a breakout, again, if it's through 28K, we could be looking at a move that takes us right to about 18K. If we're able to see, say, a failed new low and a higher low here, we could use that low and project higher, and perhaps we could be looking at a rally back toward 38K up above, or somewhere in that vicinity if we do get an upside break. But again, what's going to be the catalyst to get this thing going to the upside? Right now, there's so much tremendous selling pressure in the market that it seems like a long shot to get this thing to go up. But again, we're going to watch the edges of this 5-day range. A 5-day range can turn into a 6-day, can turn into a 7-day. But eventually, once we get a breakout from this range, we're going to have very good, high-quality ADR targets here to play toward. But it could be about 10,000 points of range up ahead based on the developing 5-day range. Taking a look now at Ether futures. Very similar price action. 1, 2, 3, 4, 5 days quantified here. 868 points of potential range could be up ahead. 800 points. If you break down through 850 and you drop 850 points, that puts us down to about $1,000 here per coin. So that could be significant if we break to the downside. 1,000 points, or let's see, let's break this back right here. So 850 here is that lower edge, 2,200 here, and we're looking at about 850 points. So 850 downward from 1850 again, and you're getting a big move to the 1,000 level. That could be significant. If this thing is able to break to the upside, then we could be looking at a return back toward 2,800 or perhaps even higher into 3,000. Again, big time energy building phase here, and 5-day range can turn into a 6, 7, 8-day range. We'll see, but eventually once we get that breakout, we'll have ourselves a good reading here to play toward. But it could be a significant move ahead for these markets, and the fact that we're still trending down and not really seeing much in the way of support could lead to a significant continuation downward until proven otherwise. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.